FBS. Let me know when I can start. Welcome, everybody. Welcome to the FBS live stream. Really excited to be here. My name's Alan Solarsh. I'm a master trader and partner with FBS.com. And today we're going to be discussing CPI, which is really exciting. So for the new people, I just want to discuss with you what CPI is so that you can understand what it is. And we can take it from there. So there's two types of CPI. The one CPI is normal CPI, and then you've got core CPI. So CPI is a basket of products that include gas and energy. Then you've got core CPI, which is a basket of products excluding gas and energy. And that is the one that we're interested mostly in. So we want to know exactly what's happening with the economy in America, where we exclude gas and energy because those ticket items are high ticket items and they take up a huge percentage of the economy. So we want to measure what the cost of products are without these two very expensive products. So today I've got with me a gentleman by the name of Guy Bouchard, and he is an institutional trader. He's traded with the banks for the last 7 years. He's got 33 years experience in the Forex industry, and he's an entrepreneur and a business owner in the Forex risk management space. He's also FSCA licensed, has a category 1 license, and is a key individual. So this is a very experienced individual. To get with or to get mentored with by Guy, it probably cost you about 5,000 Rand or $250 per hour. And we've got him here today with us so that you guys can benefit. So I just want to welcome Guy. And Guy, can you hear me?
Yeah, loud and clear, man.
Alrighty then. So welcome. So this is basically what core looks like and what CPI looks like. So on the left you've got CPI, and on the right you've got core CPI, and that's really what we're interested in, which is the consumer price index excluding food and energy. So the core numbers for this month are as follows. So month on month, it says there that the previous inflation rate was 0.2% and the consensus is 0.3%, which means that there is inflation, prices are more expensive, and we're in a more inflationary market. The year on year, the previous was 4% and the consensus is 4%. So nothing seems to be changing there. But if the numbers are greater than the consensus or the previous, then we're in an inflationary market and the Fed will probably increase interest rates. If the numbers are less than consensus or previous, then we're in a deflationary market and the Fed will most likely hold interest rates for the moment, which we're going to talk about, and you can expect the interest rates to decrease. So Guy, do you want to add anything to what I've said there? Tell us what we should be looking out for.
Yeah, so just to give you a bit of a background and why we're looking at CPI and interest rates and inflation and so on and so forth, is because inflation and interest rate drives markets. And from a fundamental macroeconomic point of view, we always have to keep our finger on the pulse as to what the economy is telling us. And the biggest economy in the world is the US economy. So yes, we've got data coming out of South Africa and so on and so forth. And yes, the market reacts to that, but nothing like something coming out of the US, because that's where the volume sits. So we're always monitoring as a community, we're monitoring the US data because every currency in the world is based against the US dollar. So what happens in the USA is critical. So we need to understand where we are from an inflationary perspective. Now, if you have a look back, in the last 26 years, the Federal Reserve Bank, which is the equivalent of our South African Reserve Bank, has hiked interest rates from 0 to almost 5%. That is unprecedented. Why? Because the US economy has been growing to such an extent that if they never curbed that growth, it would lead and have dire consequences to people like you and I. And by increasing interest rates, it slows down the economy to the point where the economy becomes manageable, because the cost of money, okay, becomes more expensive and borrowing slows down. Okay. And when borrowing slows down, spending slows down. When spending slows down, the economy slows down. Very, very simply put. So we're always looking at inflation and interest rates. Always. Which is why we're looking at CPI. And right now, we're at the end of the interest rate cycle with the Federal Reserve Bank. And a lot of the market players have said that the Federal Reserve Bank is going to pivot, which means that they're going to actually start cutting rates. Alan and I we don't agree with the market. We think that if anything, okay, there's going to be one more hike. And if there isn't one more hike, then they're going to hold interest rates till the end of next year before they start cutting interest rates. And that's going to have a profound impact on the dollar, because that will continue, okay, with dollar strength, especially if they hike. Why? Because a higher interest rate is going to make the dollar more attractive, because you're then going to buy dollar-denominated assets like US Treasury yields, and those interest rates are going to be higher, and you're going to make more money, which is why the dollar is strengthening, because people are buying dollar-denominated assets because of the high interest rates. So if they do hike interest rates one more time, then you're going to see dollar strength, and you're going to see gold actually go down, and you're going to see lots of other currencies go down against the dollar. So this is why we're looking at CPI now, which is coming out in 5 minutes, because CPI is an inflationary figure, like Alan said, and that will tell us whether the economy is slowing down or the economy is still growing to justify that extra hike that we were talking about now.
So can you carry on chatting, because I've got a bit of a technical problem with showing your face, which I'm trying to sort out to get you back into the room.
Okay, no problem.
So tell us about the unemployment and NFP and FOMC and how that affects us.
Okay, so a very, very important point. We're looking at various fundamental prints being data. And one of the biggest inflationary data that we've seen is the labor market. Everything else has been coming down. Okay, CPI has been coming down, PPI has been coming down. A lot of the other inflation figures have been coming down, except the labor market. Okay, and in the US, the non-farm payrolls is the biggest indicator of the labor market. And guess what? That print was released on Friday, and it was higher than expected, which says that there's still growth in the labor market. Unemployment actually came down, which says there's growth in the labor market. And growth in the labor market is inflationary. So the people that are saying, hey, the Fed's going to pivot and start cutting rates, it's not going to happen, because the labor market is still growing and it's still inflationary. If anything, they're going to hold the rates. They're not going to cut the rates, until they are certain that every single aspect of the market and the economy is actually slowing down, including, above all, the labor market. So that's very, very important. So in 3 minutes' time, we're going to be given a very insightful picture of where the US economy is going to be. And remember what Alan said is we look at core CPI, because they remove the energy and the energy and the gas out of that, because those two are very volatile factors. And that's why you see the US CPI figure, there are major deviations from month to month. And if you look at core CPI, core CPI doesn't have the same deviations because they remove energy and gas. So core CPI is very, very, very important. So we'll have a look at what the CPI figure is. As Alan said, CPI expected now. All right, they're expecting what? Let's have a look. we go to FX book and we have a look at what's expected. So core CPI previous was 0.2, they're expecting 0.3. So look at that. All right, it's gone from 0.2 to 0.3. That's 1 point up. That's inflationary. Normal CPI, they're looking at going down from 3.2 to 3.1. So it's a bit contradictory, but let's wait the next 2 minutes and we'll be given a fair insight. And don't forget, guys, tomorrow at 8 o'clock South African time or GMT plus 2 time is the FOMC rate decision meeting. Okay, and currently it's on 5.5 and they're expecting to hold. If they surprise the market tomorrow by hiking interest rates by 0.25%, dollar is going to kill everything in its path. And if you're trading gold, be careful because gold's going to plummet. So tomorrow at 8 o'clock GMT plus 2 is our Fed rate decision meeting.
What do you think about the COT data and the institutions trading long? And I mean, they are so long at the moment, it's ridiculous.
Massively net long.
Yeah.
COT data is a commitment of traders data. Maybe you want to give the people it's 13 seconds to the print. We can come back to COT. So let's just wait and see what happens there, guys.
All right, so while we're waiting for that, the COT data is just an audit of all the institutions and what they've purchased for the week. It comes out every Friday at 7 o'clock GMT plus 2, 1900 hours that is, in the evening. So
everything is as forecast, Al.
So tell us what the numbers are, because I can't change my screen.
All right, so the numbers are core CPI. They expected 0.3. It's come out at 0.3.
Yeah.
And CPI 3.1. It's come out at 3.1. So it wasn't inflationary. It's as forecast. So what that means is they forecasted a certain figure and it's come out at that forecast. So dollar's going to take a bit of a whack here.
So do you think it's going to go up or down? Because you're saying it's deflationary, which means that the institutions and the banks are going to pull their money out of denominated
assets.
Out of that, they're going to put it into gold rather.
So the immediate effect, okay, it's not a market mover, it's as forecast. So there's an initial reaction and we're seeing it now, okay? And the dollar's just taken a bit of a dip right now, okay, and gold's gone up, okay, as a reaction to that particular print, which is as forecast. Okay, so my view on this, and it's purely my view, it's not financial advice, okay, my view is that we might see a bit of a reaction, which is what we're seeing right now. And then we're going to continue in the trend, which is basically gold continuing down.
Yeah, so I think I agree with you there, Guy. I think that we're on that 200 moving average. I think it's just a little market reaction, probably just a retracement back to the 200.
Correct.
And I think
it has to react.
Yeah, I agree. And I think we're going to go right down to, I said initially, what did I say, about 1944? Where is that? About 1934. Between 1960 and 1940 is what my prediction is in the near short term, within the next 2 weeks.
Very interesting how COT data is net long and heavily long, which means that institution, hedge funds, banks, everybody are all expecting gold to move much higher. So the key word you said there was short term.
Yeah.
We're expecting lower gold price in the short term and then the ultimate continuation of the bullish trend back up again.
So Guy, knowing that the institutions are long and they're heavy long, I mean, they didn't really lay off a lot of shorts last week.
No.
They added a little bit of longs this week, so they were more like stagnant the last week.
There's a bit of profit taking on.
Yeah, so this drop in gold this last week, do you think this was in lieu of CPI, or do you think the banks were just closing some of their positions?
They were taking profit on.
Yeah.
They were taking profit. And COT data shows us that because they closed some longs and so on and so forth, and they closed some shorts. So that's just that it's in line with the continuation of the trend.
Yeah.
They've been adding to their longs. If you look back at the last 3-4 weeks, they've been adding at their longs tremendously. There's bound to be an element of profit taking. and that's what we've been seeing. It doesn't mean that we're bearish long term. I still think we're in a very much a bullish trend long term. COT data backs us up on that.
Yes.
And like I said, in the short term, we're going to see a push down so that they can continue to take profit in order to reaccumulate and go back up again.
Yeah, I agree. So as you can see, there's a nice inverted
Look
hammer
at the reaction.
falling.
We've gone up and we're coming back down again.
So it's exactly what we said was going to happen, and this is the advantage of understanding the fundamentals together with the technical analysis, as you've said. So having Guy on board with us is absolutely game changing, and helping us to better understand how the institutions trade, what they're doing, and what we can expect to happen instead of this being a guessing game. So I don't know if you guys know that are watching or listening, that I'm more of a technical analyst. I'm a technical trader, and Guy is both. He's a fundamental trader and he's a technical trader. Where's the order block sitting there, Guy? You can see it sitting at 19. It's disappeared now.
Well, it hit the institutional order block at 1980.
Yes.
1978.
Yeah.
And it basically rejected off that order block immediately.
Yes.
But Al, until we see a change of trend, we've got a break structure going back up again. So for now, this is a corrective move back up. For a continuation, I'm in 100% agreement with you, for a continuation down to the lower order block at 1960, and possibly moving down to the 1930s, before we see this thing coming back up again.
Yeah. So I see a lot of people on the stream saying buy, sell, a lot of confusion out there, and I think that having you on the stream has given people a lot of information to digest.
Yeah.
So I think,
and the beautiful thing is what we do is we combine the macro fundamentals together with your strategy, Al, and it really brings out a very, very clear picture. So to sum up the CPI figure, it's as forecast. It's not inflationary. So at the end of the day, I think, even though it's not inflationary, the labor market, as I said, is still sticky. That is inflationary. So the market,
I think until that calms down,
yes, we can.
When we start seeing unemployment numbers start going up, I think we can start expecting things to turn.
Yeah, and non-farm payrolls coming down. Then we're going to start seeing a slowdown in the labor market. And then all the fish will be swimming in the same direction.
Yes.
And that is when Fed will look at starting to cut interest rates.
Where do you see gold in the next year or two? Do you see it at 2,200?
Oh, yeah. Based on COT data, absolutely.
Yeah, I agree.
Absolutely.
So, guys, you need to go and check out COT data. It's absolutely imperative that you understand what the institutions are doing, because it's pointless going long in big lot sizes when you can see what the institutions are doing. So it is an audit of what the institutions are doing, called commitment of traders, and you need to understand what they're doing. So if you are going to short gold in the short term, I would use conservative lot sizes, so that you do not run into a liquidity problem. Risk management is key, and FBS promotes this. They say you must look after your equity. Don't take unnecessary risks. Rather use lower lot sizes so that you can understand exactly what's going on. So I don't trade on the 200 moving average. For me, this is a no trade zone. I have a very clever trading strategy that has about 95% accuracy. I'm a hedge trader and a swing trader. So I think I've got some of my traders on the Zoom, on the YouTube. So my traders, if you can just answer me, do you agree with me that we have about an 80 to 90% accuracy with our calls? You can just answer in the chat box so that people can understand what we're doing, and if you do agree with that. And if you are getting better success on entries and exits, just tell us what kind of percentage you're winning at. If you're winning at 50% or 40% or 60%. Tell us what kind of results you're getting with our strategy, so people can know that. And if you're making more than 20% profit per month, thanks Andres Fick, thanks Renee, much appreciated. So if you're making more than 20% profit per month using our strategy, if you're making more, please tell us. So I think let's look at some other assets. I think somebody asked in the chat group for us to look at UJ. I just want to make sure. So USD CHF. So let me just load USD CHF into our box here, and then we'll check it out and see what's happening with USD CHF. Charts. There we go. So there we go. So we're on the 50 moving average of USD CHF. I find that USD CHF seems to trend very, very long. You can make good money on USD CHF if you catch the direction correctly. So the 50 moving average, I use moving averages that the institutions use. So there I've drawn my yellow line on the 50 moving average, and the 50 moving average coincides with the 200 moving average on an H1. So you can see we're on a no trade zone on the H1 chart. You can see that we went down and then we've come back to the 200 moving average. So again, I don't like to trade on the 200 moving average. I just find that there seems to be retracements and we need to wait for price action to actually see exactly what's going to happen. So I prefer to wait about 60 to 70 pips away from the 200 moving average. But I also don't trade on an H1 chart. I prefer trading on an H4 chart. So you can see that retrace all the way back from 0.870 all the way back. Let's go and have a look there and see exactly where it came back from. 87251 all the way back. Look at that. Look at that bounce. So it's doing exactly what we said it was going to do. It's a no market mover. Yeah.
Yeah. So continuation of the trend will ultimately win.
Yeah.
So we see initial reaction, which is perfectly normal, and a lot of the time is that equates into a liquidity grab, doesn't it, Al?
Yeah, 100%. And I think that's exactly what happened on US. You can see your liquidity grab over here down at the bottom here. Let's just draw another line here. So I think the institutions were looking for stop loss hunting, so as to create that liquidity to push that price all the way back. Or they were triggering a buy stop, a buy limit at that level. Do you agree with that?
Yeah.
Right, so let's see if anybody has any questions.
That's the whole point of a liquidity grab, yeah.
Which site do you use to check the COT data? So I'm just going to check what the site is. It's called cot-reports.com. Cot-reports.com. I can't type it into the chat box. Maybe FBS can do that. Cot-reports.com will give you that information. So good afternoon, sir. I'm glad to be here. Please, how can I use economic calendar for my own good? So I think you need to start understanding the economic calendar. You can go to MyFX book, or you can go to investing.com. Who else do you use, Guy, for?
Yeah, but only those two.
Only those two, yeah. So that's who you can use. Abba, you can go to those sites, go and create an account, go check the calendar, and go and see exactly what's happening so that you can understand. And then I suggest that you subscribe to us. You subscribe to our channel and see if what we're saying fits in line with your risk appetite and the way you're trading. You know, I think people need to be flexible. There's a lot of YouTube sensations out there. I haven't seen or found one that has produced good results over a long period of time where they're getting huge profits. I don't use a stop loss and I don't use a take profit. I just don't believe that that's the correct way to trade. And my trades last about between 150 to 300 pips. So my traders that are trading with me, if you can please just type in the box there what kind of pip, like, I don't know, trend you're getting with our trade. So if you're trading with me, tell the people if you're making 50 pips, 100 pips, 200 pips, 300 pips profit, so that people can see exactly what we're doing, because I believe that our way of trading is far superior to anything out there that I've found. So again, I use a combination of moving averages and candlestick analysis. I don't use RSI, MACD, stochastic, Bollinger Bands, pitchforks, Fibonacci retracements, or any of the new Western technologies that are 50 years old. We use a different technology that's a 400-year-old tried and tested technology that seems to work. So if you're interested, Santa Corso, I know that you're there. You can just post our phone numbers, please, so that people can get hold of us. Santa Corso Ndebele works with us. He's one of our partners, and he will help you guys to get started. So you can actually contact him. If you're in Northern Africa, you can contact Adeposi. If Adeposi is online, he'll post his number as well. So Martin Muller says 150 pips. Sondu made 100 to 150 pips. That's amazing. Corso 100 pips. Okay, plus. So that's quite amazing. So well done, guys. So let's see what else is going on here. Give one more signal for gold. I don't understand what you mean, Mallory. If you can explain what you're asking. We don't give signals. We just try and read the chart as best as we can. It's using the information that we have to make, I don't know, how do you call it? Guy, what do you say? It's try and stack the averages in our advantage.
Well, it's a trading plan that we have, and we have rules to our trading plan, and we don't deviate from our rules. And we look at all the information, but ultimately all the information we gather, we go back to our trading plan and we implement them within our rule set.
100%. So I have done USD JPY. Same sort of story. There's the liquidity grab. Looking for those. Probably activated a buy limit there. And then the price shot up quite drastically. But that was like a couple of days ago, even that liquidity grab. That was 7th. So it's about a week ago. Let's go back and see gold here. Yeah, so nothing's happening. It's all.
No, it's going to.
I think we're in that sideways channel.
Yeah. Eh?
We're in a sideways channel. I don't follow this methodology, but I can see a bearish pennant forming. And they say that when you see a bearish pennant, you can expect it to go further south. But based on the fundamentals, I feel it's just going to go south.
Yeah, but I'll look at the 4-hour high, it wicked the 200 moving average. It's not by accident.
No, 100%. That's not by accident. That's
why we don't trade around it.
Yeah, 100%. So can sell gold now. Yeah, well, we're short. So you short, Guy? I'm short.
Yeah.
In fact, I'm like half a lot long, hedged, and I'm half a lot long because I'm expecting this thing to go north.
Yeah. No, I've opened up a sell which I'll TP at the various order blocks at the bottom.
Yeah,
sure. But ultimately, I want to be net long. I'm just picking my levels to go net long. That's all it is.
Yeah. Okay. So.
But hey guys, this is not financial advice.
Yeah.
This is purely our view. This is purely what we think. This is not signals or anything like that. So I just want to make that very, very clear.
Yeah, so I think our job, Guy, is just to try and stack the percentages in our favor based on probabilities, based on like the knowledge that we have. So 100%. I don't know if Ntokozo, can you post our phone numbers, please, Ntokozo, so that people can help us? Can I go long on USD CHF? So let's see.
It's not for us to say. We can't
tell you whether to go long or short. My job is not to give you signals, guys. My job is to help you to better understand how to read a Forex chart. If you want to learn how to read a Forex chart, then you should get a hold of us so that we can help you to trade safer, trade better, and make better decisions.
Yeah. We're teachers at heart, so that's what we want to do, is to teach you how to trade so that you can make your own money.
So I've posted my phone number there. You can get hold of me, and then I'll direct you to our different partners that can assist you so that we can train you. How can we reach you? My phone number is above, Emmanuel. So I think we should call it. I don't think there's anything more to discuss here.
Yeah, it's a pity.
Yeah.
I think next time we do something like that, it will be different, you know. So let's set up another one at the next major event, and then maybe something significant will happen.
Yeah, 100%. We just got to wait and see. We'll just see what happens. So, guys, I think thanks very much for joining us today. Really appreciate your time. Hope you enjoyed the live stream. We can't take any trades, unfortunately, because we are stuck on the 200 moving average, and I don't trade on the 200 moving average. So let us know if you need anything. There's my number. Get hold of us, and we'll help you to make better decisions. So,
and guys, thanks so much. The community, it's all on Discord, and we discuss this actively on Discord, you know, within the community and everything like that. So it will add huge value, because trading is lonely. And having a community to bounce ideas, questions, concerns, and everything like that, it changes the game. So join our community.
Yeah, 100%. Thanks, Guy. Thanks so much for being on the stream. I'm sure that we can do this again. Sorry about the technical problems that we had. Unfortunately, it happens. I can't fix it. I don't know why. I'll get hold of FBS and they'll help me to fix it. But you guys saw the charts. You know what's going on. And happy trading, and drive safe. Have a festive season, and we'll see you next year. Take care.